Good morning, everyone, and welcome to the European crossover webinar. And we just got some data in. It's not showing up here. It was Italian. Not sure why it's not come up here. Let's see here. It was Italian unemployment. Bit odd here. I didn't pop up. I mean, in here, but I do see we do have at the bottom of this, or top of this next hour, Eurozone HICP flash coming out, and as well as producer prices and Eurozone unemployment rate. We did get Italian unemployment just come out. Italian unemployment rate came in at 9.8%, and that's exactly what they were expecting. I'm not sure why it didn't pop up in here. Then we do have dairy prices a little bit later on, as well as ISM manufacturing PMI and ISM New York index. And we did see a pretty good strong rally here in Euro yesterday. We are seeing S&Ps come down just a bit here. We'll just jump into there. We actually just rallied up to reach a high. Right here, as you can see here, we just tagged 3,100. We just made just a new high, and see here, this rolling back down here. There's a little bit of support here, but we're kind of holding. But we actually made this run up here right to the 3,100. And you can see here we just tagged just above here, kind of sliding back at this moment. You see here on the 30 minute, formed a bit of a gravestone doji here, but pretty good little run the market's had so far. Also, we had seen a pretty good run here in the crude oil market. I don't know why this thing is. Oh, it must be stuck on the. We made a run up here. We're paring back a bit, but we made a run up here, right here, up to. Actually, just tagged up here at the 48.50. We're just slightly below $48, but pretty good move yesterday. Find a little bit of life in crude oil, and then lastly, we'll just take a quick look before we get back to FX. With the gold market, which has really been pretty much up and down, finally calmed down a bit, but you can see that run that we had made yesterday. Only up here to 1612 doesn't slide back. It's kind of been all over the place, actually. We'll get a little bit further detailed look on that, but let's go on and move on to the FX. SPU's still pulling back a little bit at that 3080. Now we did get in Asia, we did have the RBA, and we just want to go and touch base on that and the other news, and then we're just going right into the analysis. Says the Aussie dollar bounces as RBA cuts rates and global stimulus move. The Australian dollar bounced on Tuesday after the country's central bank cut interest rates as part of a global burst of stimulus aimed at cushioning economies from the impact of the coronavirus. The RBA cut the cash rate a quarter point to the record low of 0.5% after its monthly board meeting and left the door open to further easing. The RBA warned that the economic growth this quarter was likely to be noticeably weaker than the previously expected and said that it was an expectation of further stimulus in most other countries, including the United States. The market had swung wildly in the recent days to price in a move amid speculation policymakers would have to act to steady market panic over the virus. Indeed, some speculators had wagered the RBA would cut more than 25 basis points and were forced to cover short positions in the Aussie on that decision. As a result, the currency blipped up 0.3 from 65.59 away from a recent 11-year trough at 64.35. The New Zealand dollar also stretched its stayed at 62.70 after bouncing overnight from 61.80, its lowest since 2009. Investors are still wagering that the RBA will have to go further, with futures implying an 86% chance of an easing to a 1/4 point by May and 100% by June. The bank has previously stated that the 25% would be the absolute floor for rates, and any action after that would involve quantitative easing, including the buying of government bonds. Markets assume that that the Bank of New Zealand will cut rates by a quarter point to 75 basis points at its policy meeting on March 25th, and will move to 0.5% by the year end. And the yen climbs as host for the G7 rescue waiver. The safe haven Japanese yen gained on the dollar on Tuesday as the markets tempered hopes for the global monetary easing with worries about its scale and efficacy in combating the economic damage from the coronavirus outbreak. The G7 finance ministers and central bank governors hold a conference call later on Tuesday to discuss measures to deal with the outbreak and its widening economic fallout. The call, which French and Italian sources said begins at 1200 GMT, causes markets already betting that the U.S. Federal Reserve will lead a group of global monetary easing. The dollar fell 0.5 to 107.80 yen and it's lower on the Swiss franc. We don't have high expectations that the G7 are going to announce a coordinated policies, and said CBA currency analyst Joe Capurso from Sydney. We see some central banks being reluctant to pull the trigger, like the ECB, for example, the Bank of Japan, because they just don't have a lot of room to ease. In a statement expected on Tuesday or Wednesday, the G7 countries will pledge to work together to mitigate damage to the economies without detailing specifics. A source with knowledge for the draft told Reuters on the condition of anonymity. That leaves investors again confronting fundamentals. The virus and the economic slowdown it's causing will hurt, and the damage may no longer be confined to China-exposed assets. The extra room to respond in the United States, where the Federal Reserve has its benchmark rate between 1.5 and 1 3/4, compared with 0 in Europe, has weighed on the dollar. But the fear has strong gains beyond the euro, which rose as investors unwound carry trades. Its last sat at 11.45, just below its month high hit overnight. The Australian dollar jumped after the RBA cut rates, but it fell back just after 65.49. Assurances of easier liquidity and fiscal support may also help stabilize the sentiment in the very short term, but the risk of a higher rate of COVID infections needs to be monitored closely, said Asia economist Johanna Chuao. The situation remains fluid, and a lot depends on how successful the G7 conference call in keeping up with the expectations of coordinated easing. So let's go on and move into the analysis. Okay, so the euro continued powering ahead, only slowing down as stops above 1170 were triggered. The pair may eventually reach 1231. For now, resistance will be 1197, and support is going to be 1095, followed by 1058. And you can see that. I mean, we've had one heck of a run as some of these carry trades were unwound. Quite a bit of strength there, and certainly looks like in time we may eventually get to 1231. Certainly not out of the realm, but we've had quite the run already here. And once again, like I said, we didn't even take a pause until we got past 1170, finally triggered those stops, and the market began to ease back. But the support right now comes in here at 1095, followed by 1058. We're going to go with the 1095 here on this. And on the upside, for now, it's going to be here at this 1170. We've already come off quite a bit. You can almost make the case right here for resistance at, unless we get another blowout number. And I think the market may have to take a pause here. Yeah, we're going to go right here with this 1150 coming across right there. Crude oil continues to move higher at $48 right now. But you can see what a strong move we had. I mean, we came up here. I mean, the market's been so oversold for so long. But we came up to this run up here, 1020, blew past that, past the 1095, and that just must have just triggered a whole lot more shorts being covered. And I guess as the story mentions, a lot of unwinding of the carry trade, which you would think, considering how weak the euro's been, you would think that there'd be more than that. If you look at it in perspective, you would think, well, it hasn't gained that much. I mean, it has had a pretty good run, but to really pique your interest, we really have to get up to about closer to 114. So you can see it if you in perspective. We've had a decent little recovery, but it's not an outsized recovery. But we may need to, like I said, take a bit of a pause. With that, let's go and move into the cable. So cable remains mired in the lower range. Short-term support was held here at 27.42, but the market will attempt to push those stops down to 26.88. Resistance was going to remain at the 29.17. And that might be really a bit of a stretch here because we're still languishing down here. But this 27.42 is really holding up like a champ. Look at that. For the third straight day, still holding. But below that, as we mentioned here, we've got 26.68. If we break that low, and I think we need to go on and off of that if we do get below that 26.68. But that 27.42 is held like a champ. And on the upside, coming across right there, 28, right there. 28.82. Still quite a run here. We're pretty well oversold, so we do get a little bit of a bounce here. That should get us up to 28.82. So we will go with that. Well, we're looking at the Aussie dollar, and we certainly got that. We got the rate cut, but apparently some people were expecting a half basis point. Um, I think that was asking too much, unless this had been part of the a coordinated cut. That would have been, let's say that if we had seen the Fed step in and cut in the afternoon, because once again, I thought that was kind of rather silly that the Fed was going to cut before the open yesterday. It made no sense because you were, as I mentioned yesterday, you were still going to go get that selling, but the market was already rallying anyway, so that was certainly going to go on and take away that possibility. I thought, and once again, I thought that if it made more sense if they were, and the market was going to be under pressure, they were to come in on Monday afternoon and do the cut, and then it could be followed by the RBA doing a half basis point cut. It would just roll one after the other. So I don't think that them only doing 25 basis points was any different or unwarranted or whatever. I mean, not unwarranted, but less than what necessarily would have been expected. Also in the text, they said that they saw the economy's housing turnaround in Melbourne, and I mentioned some other city, I don't remember what it was, but anyway. Since the Aussie rebounded, challenging 65, 69 ahead of the RBA. Well, this was, once again, this analysis was done ahead of the RBA. We got the response back. You can see here that the resistance, which is where they tagged up to, and it actually still remains the same. It's 65, 69. And had we seen a more different response, we actually had expected the market to potentially push up here to 66.40, 66.24. Still a ways down. We'd have to really jump up here at this point. This 65.69 appears to be keeping the market in check, but we'll give it a little bit more room and say right there. You see right below here? That's what we're going to go with. So it's going to be 65.81. And support is going to be right there coming across. You can see right there. Makes the most sense here. I would think the market will be defended as on a trip back there, which is going to be 64.62. Okay, UK construction PMI is going to be out at the bottom of the hour. And taking a look at the Kiwi. So the Kiwi rallied off the weekly support level as minor short covering evolved. Initial resistance is going to be 62.89 with additional 68, 63.38. Minor support is 62.41 with the weekly support remaining at 62.05. And we're going to go with this. We're going to stay with the 62.05, this key weekly support level, which we already had marked off. And on the upside, we're going to allow it to, if we do push past the 62.89, just a hair above there, which is going to be 63.07. Let's go move into the dollar CAD. We saw quite the swing here. Look at that. Boy, this has been up and down like crazy. Look at that. We blow out, then we turn around and we look at it, look how much we get back. So the dollar CAD fell back, closing below 33.35, eclipsing the two prior days' bodies. The support will come in at 32.78. Resistance will be the major level, 33.82. And yeah, I think that is just perfect because that would be halfway back, essentially. So that is going to be resistance. But look at this. As I mentioned here, yesterday's fall eclipsed these two prior bodies here, you see? So certainly we saw that going in pair back here. And so it's going to be 33.82. And support. See right there coming across? Their support. And let's go and highlight that. Right there. Actually held there too, which is 33.16. Oh, that's what we had already. Okay, perfect. And let's go and move into the peso. Another big mover. This has been I was going to say an interesting market to trade. I mean, if you're going with these levels, but that 1988 has been very key up there. But basically kind of like trading off of the SPOs for good reason. So the dollar peso rallied back to 1987, forming a tweezer top as sellers came in, pushing the pair below support level at 1948. Rallies will be sold with resistance at 1951. It looks like we just hit 1951. You see that right there? Followed by 1962, support is 1935, followed by the pivot of 1923. So you can see, it looks like we did just hit that. 1951, sure enough. So that's our resistance as we were looking at. And support 1935. And let's go move into the dollar yen. The dollar yen found support just as stops were taken out sub 750, rallying to 850. Resistance will be 888, followed by 916. Support will be the 801. Oh, we're just actually below support. Look at this, boy. Interesting. We had that rally back to 850. We went sub 750. We found some definite short cover and rallied back up to 850. I had it here for 888, but you can see here the market's staying pretty much checked in place and actually gone below 8. So we'll just go with 778. I thought we might be able to get a little bit further push above, but we'll go with the 778 for the support. You can see our support yesterday was 750 with a potential move to 710. It's going to be 778. The 888. We're still going to stay with that 888 if we do make that push. But we talked about this yesterday. If you're looking for a market to trade, it's going to be these yen pairs. They're, I mean, as far as day trading, scalping around. I was just going to say it may seem a little bit quieter, although really, if you think about it, got a pretty good range there still. But I think this market, these yen crosses, can potentially really move around. I mean, not potentially, we're seeing it already. But I'm saying is, I think if you're looking for those for a pair or set of pairs to day trade slash scalp, is going to be these yen pairs. With that, let's go and move into the cash dollar index. $49.0 expected for UK construction PMI due out in just a couple of minutes or so. The dollar index broke through the weekly pivot, which we know there's going to be the 97.89. Before short covering culminated the move, resistance will be the pivot of 97.89 with support at 97.35. So nice rebound off of that little area right here. Actually, you can see where the opens here. And that's why I like to do my resistance and support through the bodies. You can see here, tag that. I mean, I didn't expect the move to come all the way this far down. Of course, obviously that, the plus and minus between the dollar index and the euro. So certainly I didn't expect the euro to make that kind of run. But you can see how these bodies work very well as support slash resistance. Resistance on the upside is going to be the pivot, as I said, 97.89. And support 97.35. But this has been quite the correction. Obviously, coming in tune with the fall that we've seen in equities. And with that, let's go and move into the cross rates. Tell you what, we do have there's a UK, the cable, and here comes the data. See if we get any real movement on this. 30 seconds. $52.6. Ooh, that was stronger than was expected. Look at that. No real movement here. So no real movement here. We're going to move on to the cross rates. Well, we are holding above that 66.39 in the Kiwi yen. We're actually going to go and adjust this to this major level right here, 67.16 for support. Thinking things will quiet down a bit. But the upside is going to stay constrained right here. See that 67.93? We'll see whether we can jump past that. And we already had that in place, so let's stay. Let's go into the euro yen. Boy, what a snapback. But of course, remember with the euro, we're going to keep it a little bit tight here. So right here, we're going to have the resistance right there. 20.56. We support just a hair below that. You can see right there, just right there. 1976. Well, once again, with the euro, I was going to say being the beneficiary, but the euro, I mean, we've seen those strong moves here. Certainly evidenced here by the euro odd. I mean, if you think the euro against the dollar was strong, look at this. What an absolute terror of a move. And we actually made it all the way up and challenged 171 up here. Holy smokes. At this point, we're going to still stick with the 127% extension, which is the 70.32. What a move. Support's going to be right there, that low for the day, or for yesterday, or 68.75. What a move. Golly. But a respite is due, or I wouldn't say it's due necessarily, but is warranted. Let's look at it that way. But at least for now, that'll keep us in check, I would think. And with that, we're going to move into the Euro Kiwi. We just about tagged it up here at 79. The resistance is actually going to be the opening here on this body right there. We did actually exceed it today, but right there, 78.25. 12. Once again, I'm not expecting this to, I'm thinking it's going to stay within this range. And I'm talking about the most recent range here over the last couple of days, with the support being the close right here, which is going to be 76.56. And you have to go to a weekly chart. And boy, look at this run. Let's go move in now to the ASEAN. Well, as we mentioned, these yen pairs are going to be where I think things are going to be rocking and rolling as far as if you're day trading / short-term trading these markets, the yen pairs are where it's at right now. I think we can push potentially a little bit higher, although once again, we've really laid the groundwork or laid the mortar or set the mold with how this pair is going to play out. Potentially, we can still come back up in here, but it's going to be right there where resistance is going to be. Right there, 71.33, which is 71.34. Right there's going to be support, 70.23. We've tightened up quite a bit here. And the guppy finally made it down here to the 50%. Remember, we had that 37.14 we were looking for yesterday for the market to get to, and that's exactly what it went to. 37.14, confluence with 37.27, the 50%. Once again, you can see how the market love to touch these bodies. It loves to use those as a / support / resistance. Well, there's going to be resistance right there. On that reaction, be 38.90. Still a ways to go. I mean, I guess right in here, it's actually right there, 38.57. We're still staying in a tight range, 38.57. you can keep it tight in here, which is 37.48. We're actually going to keep it just, you see right here, I'll show you this low here, 37.37 right there. I don't think we'll make it all the way to 37.14. We have gone and paired back here with the weakness in sterling. So even despite the weakness in Aussie, the weakness in sterling is trumped that. So we dipped in here. We're not too far away from here, this support here. And what I'm looking at is right coming across there. I actually tagged it yesterday, and that's going to be our support. See this body touch here? Confluences with this one here, which is 94.37. I actually had 94.08 before. Let's see here. There's 08. Like right here, right there where that opens up. Let's still not a body touch here, right there. It's 94.03 and right there. You would think there'd still be some more pressure. Yeah, we'll stick with the 94.08 with resistance being right here. 95.60. And that's going to wrap it up for the currencies. We'll take a look at the SPOOs. Looking here on a daily. The key level comes up here is going to be a run to this 31.18. If we're able to go and get that. Obviously, I mean, there's a meeting today of the G7. I think it's 90 minutes before the U.S. Open. I don't see the point of doing any coordination. Once again, it's like wasting the ammo. I think they're probably more likely to come up with a communique. I would think that they're ready to step in. It just doesn't make any sense to waste your ammo here, but certainly you'd be looking at 31.18. We're going to move into the 2-hour chart. And 31.25 is going to be the 50%. So if they were to bolt up in here, there is some resistance coming in here. Look. Right there. Which is 31.17. I think I've got that marked off on a 30-minute chart. That 31.11 to 31.22 looks like a good little area there. So this whole area right here, if they do make a little run up here, depending on the strength of the move, but some decent resistance here developing initially at this 31.11 on up to 31.25. If they get push that stretch, I think there's a lot of resistance here at 31.35. Now, don't forget, before you even get there, 31.25 is 50% of this entire move back. You can see here they came right back to this exponential moving average here. We had generated that buy yesterday, and you can see it's still holding up very well. It certainly looks like they want to challenge potentially here to this 31.11. Let's go on and move into the crude oil market. We certainly saw a pretty good rebound. OPEC talking about cutting. 49 even would be the 50%. And boy, that's been a heck of a move. I mean, look where we were on Monday, and we had talked about, I think 44.35 was like a very good weekly support. And look how far we've gotten. And boy, look how much we've rallied. Holy smokes. It's 48.69. Pushes it up to 48.81. Really, if you go with this right here, that'll give you the 73, closer to 69. But still in the buy mode, but stretched here. Prior high was 54, so that makes sense. It could push them up to 69, maybe even as high as 78. Let's go move into the gold market. I haven't done much work at all with the gold market. A lot of it, you know, we saw the liquidation and people having to raise cash, and that's why I thought that this whole move was herky jerky. Although we had some nice moves. If you were specifically just trading the gold off of these levels, where we rallied up to 90 and fell back, and we rallied up to 1605 and fell back $20. And remember, yesterday we were talking about 1613. That's also was a 38%. We came up just short of that, but look, we fell back. But we're just kind of all over the place. I don't think there's a real good sense. Now, if you're just trying to scalp around, that there have been some decent ranges. I mean, we've gone from range to range, but now I think the market's quieted down. I'm not sure what this thing wants to do at this point. But it certainly was victim of liquidation as far as just trying to simply raise money for cash, not the regular liquidation. But you know, I'm in losing positions. I need to raise cash. I've been doing really well in gold. Let me dump this. You see what I'm saying? I've got no choice. I got to dump it. I got to raise cash. So that's what I'm thinking, is that it's really messed it up, so to speak, technically speaking. But we've rebounded back and forth in between good levels. Once again, like I said, down here we rallied up to the 90, fell back, I think about $17 or something like that. We rallied up to 1605, fell back $20, rallied nearly up to 1613, could come back quite a bit. Now we're just kind of stuck in the middle of the road here. But I don't think anything's really big going to happen until we get, I would say supposedly, because it is a meeting, but until we get past this G7 meeting. But I believe it's going to be more of a communication than action. But only time will tell. So I think we're going to be stuck in a rather tight range until then. That's all we have for today. Thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room.